It's often one of those topics that in the conference room, someone says to me, "How's the market?" Not once has someone been referring to the bond market. It is always the stock market. It's usually just the United States stock market, by the way, but it is one of the critical pieces of the portfolio. And if you think about your portfolios over at the highest level, some of you may have up to 50% of your assets in bonds. So that's a lot of exposure and a lot of dollars in a market that really doesn't receive any notoriety. You hear about maybe the inverted yield curve if you're reading CNN Business or Bloomberg. Aside from that, you really don't see this as a ticker floating around in the corner of your local news station because they're covering the Dow, the S&P, and the major markets that garner the attention and truly create a lot of the volatility, albeit with the upside. But the bond market and the bonds as an investment and a component of the portfolios that people have is critical for us to be able to help provide that consistent lower volatility return experience over a long period of time. And don't get me wrong, bonds have not had the best 3 or 4 years. Since 2022, they have been close to abysmal. And we get it. And you look back and you say, why the heck do we even own these things? But if you stretch that evaluation window out longer, there is very clear evidence as to why we own them.